2024 is set to be a landmark year for digital assets. The SEC's long-awaited approval of spot-based Bitcoin ETFs has fired the starting gun on what is shaping up to be an exciting 12 months for cryptocurrencies, and has brought digital assets further into the mainstream. Here at CoinShares, we've been compiling an in-depth report that details our expectations for the year ahead, and in this short video we'll be sharing the highlights, including our outlook for Bitcoin, altcoins including Ethereum and Solana, developments in technology and the blockchain, and of course the ever-evolving regulatory landscape. Wherever you look, things are moving at a pace, and throughout the year we'll be keeping you up to date on all the developments. Here's our take on the highlights.
With the SEC approving the long-anticipated spot Bitcoin ETF on the 11th of January, 11 ETFs began trading on the very next day. Day 1 saw an impressive $4.6 billion of volume, with GBTC being the most heavily traded ETF debut for any asset ever. Although prices briefly spiked to $49,000, Bitcoin now sits at roughly 15% below its peak. Total net flows for all products sits at just under $1 billion. Regardless of short-term price action, this approval has opened the market to a broader range of investors, representing a major milestone in the acceptance of digital assets. While predicting the exact scale of post-launch investment flows is challenging, a conservative estimate suggests that 10% of the current assets under management, approximately $3 billion, could raise Bitcoin prices materially. With the halving around the corner in April, whichever way you look, it's going to be an interesting 12 months for the leading cryptocurrency.
The approval of the Bitcoin spot ETF has sparked a notable surge in Ethereum, outshining Bitcoin with a 20% lead. This trend could also be due to traders anticipating a potential spot ETH ETF later this year, though a Q1 2025 debut seems more probable. Notably, Ethereum's Layer 2 protocols, particularly Arbitrum and Optimism, have shown impressive performance. With the upcoming EIP 4844, these platforms are poised for enhanced profitability and efficiency. Solana has also made strides outpacing Ethereum developer metrics across multiple short, medium, and long-term timeframes, largely driven by recent price movements, but also the realization of better protocol composability. Optimism's developer scene has also picked up steam due to Coinbase's adoption and its law of change strategy beating out other Layer 2 visions. 2024 could also see more product development in alt, Layer 1s and Layer 2s getting product market fit and solidifying themselves higher in the market cap rankings.
2023 marked a significant upswing in the Bitcoin network hash rate, and we're anticipating this trend to roll into 2024. Hardware prices have been on the decline since late 2021 and may have reached a trough in the end of last year, prompting miners to pump nearly $900 million into new machines since October. Despite the upcoming halving dampening miners' profits, the recent surge in the Bitcoin price and the machine upgrades should keep most of them afloat for the foreseeable future, preventing the overall hash rate from coming down. And while high hash rates may not be every miner's cup of tea, it is crucial in ensuring that the network remains robust and secure, making Bitcoin an even more reliable asset than before. Elsewhere, other coins are also taking the steps to ensure that their infrastructure keeps up with demand and that they can continue to challenge Bitcoin's domination of digital assets.
So, crypto regulation in 2024, what do we expect? Well, obviously there's some good developments, positive developments, but there will remain headwinds and enforcement actions. For example, the United States, the ETF is finally here, and there'll be other products coming out. But the SEC will nevertheless continue its enforcement actions against actors in the ecosystem who they believe have violated US law. In Europe, it's a slightly better situation. Of course, MiCA, which is the overall pan-European crypto regulation, will slowly be implemented by the member states, and hopefully soon we'll see a unified regulation. So in the UK, unfortunately, we don't expect much of a change in the FCA's hostile attitude toward digital assets. We continue to expect aggressive enforcement, and unfortunately, that will probably hinder the development of the crypto ecosystem. So overall, some positive signs, but don't forget, there will continue to be regulatory enforcement and action in this space.
2024 marks a significant turning point in the digital asset sector, with the expectation of substantial institutional investor participation for the first time, following the SEC's long-awaited approval of a spot-based Bitcoin ETF. We predict that further such regulatory hurdles will fall, and as the underlying technology continues to improve, digital currencies will move further into the mainstream. Whilst much of the focus at the start of the year has been on the primary digital asset Bitcoin, a number of altcoins, including Ethereum and Solana, are also starting to demand their share of the spotlight. If you'd like to learn more about our thoughts for the year ahead, then head over to our website to read the report in full, and stay tuned to our regular updates throughout the year as we keep you up to date with all the key developments.